Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, March the 26th, 2026. Okay, so what we're waking up to, let's just go through sort of a bunch of charts here. Essentially, what is happening is that the market is a little bit risk off this morning. There's a sense that there's not going to be an immediate cessation in hostilities. So where are we at? We're basically at the situation where the US possibly may even escalate in one final push, a massive sort of bombing campaign, maybe even some ground invasion for some of those strategic islands in the Strait of Hormuz. On the other hand, Iran seems to be sort of holding out for slightly better conditions and effectively yesterday rejected, apparently, the US 15-point plan. But the reality is that there seems to be a lot of internal division within Iran. A lot of the communication is very bad. We heard that from the Pakistanis yesterday, because literally a lot of the Iranian commanders, both military and political, are sort of in bunkers. They're hiding out. They're fearful for their lives. So the point is that there's a lot of fragmentation. There's possibly a disconnect from reality. And then on the US side, clearly there are sort of political imperatives for the US to have a quick sort of cessation of this war. Israelis is a little bit sort of murkier. They seem quite happy just to keep on pounding away and reducing Iran's sort of military infrastructure. As to the Saudis, keep in mind that these sort of higher oil prices are not bad for the Saudis. They're able to ship from east to west through the Yanbu sort of pipeline about 4 or 5 million barrels per day. So they are by far the least affected of a lot of the oil producers in that in the Gulf and sort of Persian Gulf zone, and therefore for the Saudis, a continuation of the war is not necessarily wonderful, but it's certainly not a horrible thing. So the other issue as well is that there's a lot of headlines saying that in the meantime, there's been Ukrainian strikes on quite a lot of sort of Russian oil refineries and whatnot. And there's sort of a lot of numbers going around that, maybe 30, 35, 40% of Russian energy export capacity has been cut. So the point is, no, not only do we have maybe, sort of 40 or 50% of the energy products out of the Gulf region being cut, but we also have a significant sort of reduction in Russian supplies. Long story short, the world is still suffering from an energy shortage, and there doesn't seem to be any sense that there's going to be a very quick cessation of hostilities. Having said that, it does seem that in the back channels, the US is definitely communicating via Pakistani channels with Iran. I think there's going to be sort of something is going to sort of grind to a halt here, but whether that's a day or two or whether that's, maybe sort of 10 days is what the market doesn't really know. And that's what we're seeing in the market here, just a sense that the energy sort of crunch is continuing. Oil prices and especially refined products like jet fuel is going crazy, diesel is going crazy, heating oil. There's reports that, for example, in Australia, petrol stations are running out of petrol, out of gasoline. There's also reports that in India, for example, in Mumbai, 25% of restaurants have closed because they don't have the gas necessary for heating and for cooking. So the point is that there's all this kind of disruptions, especially in the East Asian and Southeast Asian region. Not so much necessarily in the US, and Europe is somewhere in the middle. But all of this is pointing to extra volatility and uncertainty. And as we can see here, let's just go through some charts on the VIX. Continues to be very elevated, 27, almost up to 28. So we had a little bit of calmness, but the uncertainty has come back in, and the market is realizing that even if Trump over the weekend, for example, were to sort of issue some kind of imperial edict announcing an end to the war, the reality is that the Iranians are still blocking the Strait of Hormuz more or less, except for a few ships. Their own ships are getting through, their own tankers are getting through. So keep in mind that Iran, yesterday Trump was saying the Iranians are begging. This regime is making about $140 million per day, $140 million per day from oil revenue, because their oil is getting through and is being exported, and they are still, making quite a lot of money. So the regime is still getting plenty of income. And so the reason I'm saying all this is just to say that, maybe for the Iranians, you have to ask, if the war ends, what's going to happen to all of those, the people in the military police, and, they'll probably be executed or hounded. So it's not obvious to me that they would want a unilateral sort of cessation, a ceasefire. Okay, so volatility high. We also see volatility in the bonds. is still very elevated, which is not great for equities. Equities hate high bond volatility. Obviously, oil volatility is still high. So volatility is very high. And what we've seen overnight, you see that the equities in the US space anyway, the indices are down about sort of 80 basis points, Nasdaq down 92 basis points. And just from a technical perspective here, just very, very weak price action. As I say, every single bounce is being whacked, is being sold aggressively. We had a bounce here, sold. We had a bounce here, sold. So over the last, sort of 8 to 10, 12 trading days, no bounces proved sustainable. All the moving averages, as you can see, are obviously sort of rolling over. We now have the 200 almost about to cross over the 20 almost about to cross over the 200, which a lot of technicians regard as a pretty nasty signal. And so symbolically, we'll start getting the headlines, the Death Star or the Death Cross, whatever. So the point is here is that it seems that absent some kind of sort of ceasefire agreed to by Iran also, not just the States, Iran, also Israel, is going to be necessary to sort of to calm the markets. And I would say here that probably the easiest way forward for the equities is further downside pain. But obviously, there's a clear level down here at 53.30 on the ES front contract. So that looks like a sort of a juicy target, a nice little magnet down below here. So perhaps we'll get some sort of a reactive bounce there. But I think this morning or over today's session, as I say, absent some kind of positive, and confirmed headlines, that is going to keep on collapsing. Nasdaq, similar kind of situation here. Again, clear downside targets. You see here the 20 days touch the 200-day moving average here. The clear downside target for Nasdaq is 23,750. Could we get a good bounce there? That would be definitely, I think, an interesting with a very tight stop loss. I mean, it might bleed down lower to, let's say, 23,480. You see down here from the 1st of August numbers or level. But that could be an interesting sort of entry point there for a reactive bounce. But again, you're kind of catching a falling knife at this point. Russell is also weak, not as bad. You see the Russell still remaining above its 200-day moving average. But the point is that equities everywhere are under pressure. Also, global equities, just having a quick look over in Europe, red candle on the Euro Stoxx 600. Similar kind of situation with the DAX, also red. Japan, not too bad, but still trading on the heavy side. India, which is being absolutely destroyed here, the Sensex, because of course they import all of their energy needs. So India under particular pressure. And we are seeing this divergence between countries which are sort of net exporters of commodities, specifically energy, and those which are importers. So let's say, for example, looking at India here, which is under huge pressure compared to the Bovespa index in Brazil, you see a nice sort of a bull flag here, so breaking out. Brazil, I was mentioning that early on in the war, Brazil was doing okay and has been relatively stable. Compare this Brazilian sort of index, let's say, to let's say the Euro Stoxx, just to put that into context here. So you see that Brazil, I'm not going to say it's a winner, but it's definitely less affected negatively because it, is a relatively large energy exporter, also sort of food exporter, and we know that because of the rising costs in fertilizer, that food costs are also going up. So Brazil is relatively well placed, and you can see here, let's say a spread trade long Brazil, short India would have done very, very handsomely at this point. China also remains under pressure. Australia remains under pressure. Even the Wunderkind, the Kospi over in Korea is starting to crack a little bit. So as risk goes off the table. Okay, so looking at other markets, obviously the bonds, if we just look over at the bond market, well, let's look at oil because that's driving everything. So keep in mind the correlations, everything very, very correlated to oil. So if we look at the US contract, WTI, you can see here that just the market is basically saying, okay, there was this sort of potential sort of ceasefire talks, and you see that oil collapsed here, $10, $12. But subsequent to that, we had a day of indecision on Tuesday, and now yesterday and today, Thursday, the oil price is starting to push upwards because remember that every single day that this drags on, there's, at least depending on the maths you use, sort of 6, 8, 10 million barrels of crude oil, which are not exiting through the Strait of Hormuz. And that means there's less refined products. Refined products are going crazy. So the point is that the physical market is becoming tighter and tighter and tighter and tighter every day. Remember back to those of you trading for a while, remember back in the old days, if OPEC excuse me, if OPEC would, sort of cut production by 300,000 barrels, the oil market would move. We have 8, 9, 10 million barrels per day not moving. Plus, it seems as though there's less Russian oil. So the point is that the oil market, the physical oil market, is saying, hey, like this is an ongoing problem. Every single day we have less oil. It's as simple as that. And no matter what Trump says, he's done a relatively good job of jawboning the market lower. But the reality is, until the Iranians get on board and there are definite concrete signs of as I say, a cessation in hostilities, the oil market will probably grind higher, maybe even up to this level up here, up to $100 on the WTI. And there's also rumors that the Americans are going to go for one final massive escalation and push to really try and crush the regime and force a ceasefire. As I said, a ground invasion, a massive bombing campaign. Israelis, as I think I mentioned yesterday, if anything, are bombing more and more and more. So the point is that this war is still continuing. Let's just keep that absolutely at the front of our brain. Brent remains very elevated as well, up to almost $105. But keep an eye also on gasoline prices. They had come down on the talk of Trump's tweet about sort of a ceasefire or whatever. Excuse me. But gasoline prices ripping higher. Gasoline prices at the pump in the US are higher. And we have just generally, if we look at looking at the TTF, which is the nat gas benchmark contract over in Europe, it's come off its highs, but it's still compared to pre-war still pretty elevated. So that's the situation. Energy remains expensive, and obviously the bond market. The bond market is not doing great. I mean, if we look here, let's just look at the front end of the German curve. So we look at the Schatz here, which is the 2-year. It had a couple of days of, a nice little reactive bounce consolidation, again, with that positivity. But as we could see over the last 48 hours, the last couple of trading days, pushing much lower, so pushing up yields. Similar situation all across the curve. You see the 10-year, the Bund here, and the Buchsel, massive sort of selling off, even over the once darling BTPs in Italy, also under pressure. And similar situation here for the US. I won't bore you with all the details, but ZT under pressure. We see the 10-year under pressure. We see the 30-year, the ZB under pressure. So this is all pushing the yields higher. And the other issue as well is that it's not only about inflation worries because of increased energy costs. It's also the fact that all of these countries which used to be selling a lot of oil in, let's say, the like Qatar and gas, like the Gulf states, and had surplus money, which they were maybe putting into investments and gold and whatnot. If you have less income, if you're unemployed and you no longer have income, you dip into your savings. You start selling what you can to raise cash to pay for stuff. So it could also be that apart from inflation fears, there's also some kind of liquidation of assets, especially US treasuries and gold we've seen has been under a lot of pressure as various entities around the world are maybe selling stuff just to raise cash. And there was talk, and just what I'm trying to say is, like, for example, if you look at the 2-year auction on Tuesday, which was a disaster, if you look at yesterday's 5-year auction, which was very, very poor as well, basically we had tails of, I think it was 1.4 and 1.8 basis points, which we haven't seen for many, many years. And so the point is that market participants, overseas buyers, are not stepping up as they have been in buying US Treasuries. So the Treasury market is under pressure, not only because inflation expectations are ripping higher, especially the 1-year and 2-year break evens, but also because market participants are saying, hey, we're not buying treasuries, we're actually selling them to raise liquidity. So keep in mind that's kind of going to put that under pressure. And if we get bond yields going up, that's going to be a downward pressure on equities. And we're also seeing that obviously in gold. So gold had a nice little bounce. And I still believe that long-term gold is a sell. But the reality is, we're hearing rumors that the central bank, for example, of Turkey, which has about $100 billion worth of gold, is maybe letting a little bit of gold go into the open market. They're selling off a bit of gold, excuse me, to try and stabilize the Turkish lira. So the point is that, especially even like emerging markets, countries like, who knows, like South Africa under pressure, the gold price is down. The point is that this is having a lot of repercussions in emerging markets as well. And there could be gold selling for liquidation, for many kind of market participants. And we see here the gold, it failed. So if you look at the Fibonacci from that sort of recent impulse on the 2nd of March, you can see here the gold, it did bounce from that pretty key level, but unfortunately, for those who are long gold, it failed here at the 38% fib. So that's obviously a key level there, about the 4,600 level. We see that 38% fib retracement failing there. So what do we need to see from gold now? Just from a technical perspective, I think we would like to see the bulls, as I always like to do, they will have to come in here. So at this point, Gold has sold off a little bit. Really, the bulls need to step in somewhere between this 38%, the 50%, and the 61.8% of fib retracement, which also coincides nicely with the 200-day EMA, 42.95 approximately. That's going to be a very key level, because if the bulls can't step in this zone and we go below the 61.8 fib retracement here, which also coincides, as I said, with the 200-day, this could open further downside. So that's a very, very key level, which I'll be watching. In gold over, and obviously that's going to be headline driven, of course, as well. Similar situation in silver, even more dramatic. That's under pressure. Watch out for this level down here. This is where we sort of had the bounce before at about $65. So it's a horizontal support, and obviously the recent low here, which is coinciding with the 200-day EMA. Actually, just for fun, let's have a look at the simple moving average. Which is, okay, no, it's more the EMA. So again, you always have to be looking between the simple and the exponential moving averages to see which one the market seems to be most focused on. So no surprises there. Copper not doing a huge amount, actually not doing too bad, all things considered here, hovering around the 200-day EMA, waiting for good sentiment. It's difficult with a strong US dollar and the lack of positivity for copper to do well. BTC has been disappointing price action. I was saying yesterday that we're getting sort of higher lows, and is this a bear flag, or is it just grinding up to sort of retest this key level? Let's see what happens, but this is going to be key here if it drops below this level of about $67,500, because if that happens, that would break the sequence of higher lows. We don't want to see sort of a sort of a lower low, so to speak. So that's going to be very key, and of course that's also that little uptrend there, and that would signify an exit to the downside from potentially what this could potentially be a bear flag. And if that were to happen, that could open the downside to a bit more nastiness. So BTC, not significantly good price action either. Just finally, guys, want to have a look at the currencies. Essentially, it's a story of relative strength of the dollar. You see again the dollar just in all this uncertainty. And keep in mind that America produces about 13.5 million barrels of oil per day. So these elevated oil prices are not necessarily a negative for the US dollar. It's not like this, the 70s or the 80s where America was importing a lot of expensive oil. At this point, for sure, a gas price is higher at the pump. That's bad for the pocketbook of most Americans, et cetera, et cetera. But the reality is that there's also a lot of dollars sort of being produced because of these elevated prices. And just from a technical perspective here, this is starting to look a little suspiciously like a bull flag here. So it would not surprise me at all if the hostilities to continue on any kind of massive escalation by the US and Israel, and a lack of willingness apparently of the Iranians to play ball. This could be, you see this here, like some kind of a bull flag here, and we could definitely see pretty quickly a retest of this very key level at a 100 or 100.5 in the US dollar. And of course that, I won't bore you with all the charts, but everyone else under pressure, especially some of these sort of high beta currencies like the Aussie not doing well. And as I said, we're starting to get some sort of fuel shortages in Australia. So the Aussie dollar really underperforming a lot and really starting to tumble here. New Zealand also under a lot of pressure. This is a very ugly chart here. Look at this, just a heavy, a gravity-laden chart. So that's going down as well. Okay, I'll leave it there, guys. Obviously, we're going to be headline driven. There's not a huge amount of data today. We do have initial jobless claims coming up in about 40 minutes or so. That's expected not to be, particularly nasty or particularly wonderful, just relatively robust labor market in the US. We also have some Fed speakers. Let's see what they have to say, because the ECB has been, on the whole, relatively hawkish over the last week in terms of ECB commentary. So let's see what some of the Fed members have to say about the potential for inflationary, sticky inflation with the energy. Take care. Have a great trading day. And I'll be back tomorrow, if all goes well, with the macro snapshot here. Thanks very much. Take care.